This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The International Energy Agency, IEA, on Tuesday raised its oil demand growth forecasts for this year and next despite slower economic growth in nearly all major economies. Although its 2024 outlook remains much lower than that of producer group OPEC. The Paris-based IEA said the market could shift into surplus at the start of 2024, having been kept in a significant deficit through year-end by voluntary cuts from Saudi Arabia and Russia which last until the end of December. For now, with demand still exceeding available supplies heading into the Northern Hemisphere winter, market balances will remain vulnerable to heightened economic and geopolitical risks, and further volatility ahead, the IEA said in a monthly report. China's oil refinery throughput in October eased from the previous month's highs amid weakening industrial fuel demand and narrowing refining margins. Total refinery throughput in the world's second-largest oil consumer was 63.93 million metric tons, data from the National Bureau of Statistics, NBS, showed on Wednesday. That was equivalent to 15.05 million barrels per day, BPD. A slight slowdown on September's record 15.48 million barrels of oil per day. Run rates were, however, 9.1% higher than last October, when widespread pandemic restrictions suppressed transport fuel consumption.
Moving on to the top news in the energy sector.
The European Union reached a deal early Wednesday on a law to place methane emissions limits on Europe's oil and gas imports from 2030. Pressuring international suppliers to clamp down on leaks of the potent greenhouse gas. After all-night talks, negotiators from EU member states and the European Parliament agreed to a law which from 2030 will require importers of crude oil, gas and coal into Europe to prove those fuels meet a methane intensity limit. The law will now be put to the European Parliament and EU countries for final approval. That step is usually a formality that waves through pre-agreed deals. Investors continued to sell petroleum futures and options last week as sentiment became the most bearish since the middle of the year, before Saudi Arabia and its OPEC partners removed extra crude from the market. Hedge funds and other money managers sold the equivalent of 57 million barrels in the 6 most important futures and options contracts over the 7 days ending on November 7. Fund managers have been sellers in 5 of the most recent 6 weeks, reducing their combined position by a total of 331 million barrels since September 19. Next, we have the top news in metal markets. China's crude steel output fell for the 4th consecutive month in October, official data showed on Wednesday, as more mills implemented furnace maintenance amid thinning margins and disappointing demand in the peak consumption season. The world's largest steel producer manufactured 79.09 million metric tons of the metal last month, down 3.7% from 82.11 million tons in September, data from the National Bureau of Statistics showed. While a decline from September was expected, the drop was steeper than estimated, with production 1.8% lower than a year ago. Iron ore futures reached nearly a 2.5-year high on Wednesday, driven by stronger than expected industrial output in China and ongoing support for the country's ailing property sector. The most traded January iron ore on China's Dalian Commodity Exchange rose 2.6% to 987 yuan, $136.10 per metric ton as of 0300 GMT. On the Singapore Exchange, the benchmark December iron ore was up 1.7% at $128.18 a metric ton. We will now look at the top news in the agricultural sector. European Union soybean imports so far in the 2023-24 season that started in July had reached 4 million metric tons by November 12, up 2% compared with 3.92 million a year earlier, data published by the European Commission showed on Tuesday. EU rapeseed imports in the same period totaled 1.89 million tons, down 31% from 2.72 million a year earlier. Soymeal imports totaled 5.55 million tons, down 6% from 5.93 million a year ago, while palm oil imports stood at 1.24 million tons, 9% lower than 1.36 million a year earlier.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.